All right, assalamu alaikum everyone, and good morning, inshallah. We're going to go ahead and be continuing our technical analysis webinar. I know last week I had said that we're going to do psychology this week, but I realized that a lot of you are new traders and you haven't really experienced the ups and downs of the market. So when you haven't experienced it, it's hard to understand some of the concepts that I'll be going through. Yes, in psychology, you'll have greed, revenge, tilt, which is anger, confidence, overconfidence, misery. It's all part of it, just like life. Some people say married life, but I don't say that. Um, but before we experience all that, we have to go through trading first. We have to be trading for at least 6 months to a year, and you feel all of that. Once you feel all of that, then you go into psychology and figure it out. But inshallah, we will go through psychology next week in our last webinar, and we'll also go over indicators, and that'll be our last one before Ramadan starts, inshallah. But today we'll go over something called the trading plan. This is very, very important. What we're going to do is take everything that we've learned in the last 4 weeks, and we're going to put it together, and then inshallah, we'll go over how if you had to take a trade, and if you wanted to take a swing trade or a day trade, this is mostly for that. Position trading, yes, you can still do it with this as well. Long-term trading, you can still plan it. But how would you do it? How would you see what stocks are moving, which stocks you want to buy, whether they're halal or not, whether they're acceptable or not, and how would you enter the market? How would you draw out your support and resistances? Where's your entry? Where's your exit? How many contracts or shares to take? And then how do you take profits? And how do you stick to your whole plan? So inshallah, I'll do my best to squeeze all that in an hour. So we'll go ahead and get started. Bismillah. All right. So this is all we've been through. We've been through candles and charts, trends and patterns, supports, resistance, risk management. And now we're going to put all of this together, inshallah, and then come up with something called the trading plan. Okay. And then we'll go through indicators and psychology next week. All right. So first, the most important thing is to figure out whether you're a day trader or a swing trader or both, because day trading is basically you're buying within the market hours. You're buying, let's say, pre-market or 9:30 a.m. Eastern Standard Time and selling by 4 p.m. Or if you want to do aftermarket, but I'm just going to focus on the actual hours of the traditional market, which is 9:30 a.m. to 4 p.m. Usually you'll buy anytime within that and you'll sell within that. That's day trading. Swing trading is anything you'll hold beyond one day, right? That's how I view it. As I know some people say, well, yeah, it has to be a week or more. Honestly, as soon as you hold price, or as soon as you hold a position overnight, you're swinging it. That's what they call it in our world. You're swing trading. You're swinging it to the next day. So you can hold it for a few days, a few weeks. Sometimes people even hold it for a few months. Once you get into about like the 10, 11, 12-month mark, now you're holding long term. Because once you hold it for a whole year, 52 weeks, then you're no longer in the regular tax bracket. You're in something called capital gains bracket, where you can your tax is reduced to about 15%, especially if you hold it for at least 12 calendar months, 365 days. So that's called position trading or long-term holding. So I'm just going to allow some people in. So we have to be aware of that. Um, so we have to decide whether we're day trading or we're swing trading. And you can do both. You can do both. I do both as well. Um, but that makes a difference in how you set up your trading plan. Now, if you're swing trading, you got to ask yourself a few questions. Are you willing to hold stocks overnight? Now, what happens overnight? Overnight, a lot of swings happen. News drops overnight, right? Earnings reports happen overnight. So are you willing to hold overnight? And are you okay with it? Are you okay with what's going to happen tomorrow morning, right? And how will this affect you? Are you going to be able to sleep at night? Or are you going to be constantly waking up and checking your position at 1 a.m. Pacific Standard Time? That means that's 4 a.m. there. That means the market's open. Are you going to lose sleep because you have a very large position? So you really have to figure out whether you want to swing trade or day trade. Here are some questions. Is a few days, weeks to a few months too long for your patience? Because when you're swing trading, let's say you're taking a 3 week swing, and let's say you're in NVIDIA, it's not always going to go up, right? You're not always going to be going up. There's going to be times where you go up and there's going to be a big drawdown, and then you get scared, like, oh my God, no, I should quickly get out. So you have to understand, are you okay to stay in that zigzag pattern? Are you okay on the big drops or the large drops and continue going for a few weeks to a few months? Are you okay with slower growth at the start, right? Are you okay with something it's sometimes the stock won't even move, right? It'll just stay in one place, just consolidate, 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 and then finally take off. Are you okay with waiting, right? And like I said, can you handle the large price swings in your account? Sometimes you're up 1,000 and you're down 500. Are you okay with that? And obviously, are you a patient person? Because you have to be patient in order to swing trade. You have to know. And today in the trading plan, we're going to figure out how to identify targets, where to take profits, where to get out, stop loss. So we went over that last week as well. And do you have the time to generate ideas at night or on weekends? Because when you're swing trading, you usually don't wake up at market hours. You kind of figure out your ideas, you check the stocks, and then you get in during the market hours or sometimes after hours, and then you just hold. So you need to spend some time really analyzing the stocks. And then can you be disciplined, right? You need to set entries, stops are huge, your profit targets, and you got to stick to the system. That means today I'm going to show you a few systems. Systems means like a trading plan, a trading edge. Day traders use this a lot. They use one or two systems, and then they say every time this happens, we trade. Otherwise, we just sit on our hands and we don't trade. And that's the discipline, actually. So, all right. And for day trading, if you're day trading, you have to ask yourself, and I'm not going to get into whether it's permissible or not. There's a lot of different views on it. I'm just going to talk about it, and it's up to you whether you want to do it or not, inshallah. So, do fast decisions make you nervous? Because when you're day trading, the morning is the most crucial time to day trade, right? Right at 6:30 a.m. or 9:30 a.m. Eastern Standard Time. It's crucial. As soon as that bell rings, you're in the races. You're there. You got to start making decisions right away. And does that make you nervous? Are you good at hand-eye coordination? What I mean by this is if you're trying to enter a position, you don't want to be fumbling your mouse, hitting your keyboard. Are you good at quickly getting in things? It requires a little bit of skill, right? Are you how are you with quick math? Sometimes you have to decide how many shares to take, how quickly to take that share, where your stop loss is going to be, and then quickly get in, right? So are you good with quick math? Can you decide what your stop loss is going to be and how much are you willing to risk on 100 shares? Or let's say you take 27 shares. How much are you willing to risk per share and where are you going to take your profits? And do you handle pressure well? It is pressurized situations because sometimes your price will start moving in your direction and suddenly swing right back towards your stop loss. And then you take your mouse and you're getting ready. So do I get out? Should I get out earlier because the price is really going? Or do you relax and just say, hey, look, if it hits my stop loss, it hits my stop loss. I'm okay with losing this money. I'm okay with that. And does your schedule allow you to spend enough time trading during certain hours of the day? Because the market open requires you to wake up early. Most of you shouldn't have a problem if you're waking up for Fajr, then this is right up your alley. Um, and are you okay with like spending that time, especially if you have day jobs? If we all have day jobs, we have to start day jobs at a certain time. Let's say 8 o'clock or 9 o'clock, you start. Are you okay to trade between 6:30 and 7:30 or 8:30, right around that time, where volatility is the highest, right? And then are you able to get ready and then go to work, right? So there's a lot involved in it. It's not easy at all. But if you can commit to it, the reward is quite high. All right. So when you start trading, when you start um, swing trading and day trading, you have to know what's going on in pre-market. And it's important. Why I say pre-market is important is because a lot of the moves happen in pre-market and post-market, right? After market close, such as earnings reports. Like we've seen earnings reports over the past few weeks. We've seen earnings reports happen in the morning. We're talking about it in our WhatsApp group that, hey, what's going to happen? As soon as earnings reports happen, the price either jumps up or it drops down, 5 to 10%, depending on the stock itself. Even if it's good earnings reports, we've had several stocks with great earnings reports, but price dropped, right? Price dropped. That's just the way the market is. You can't say, okay, well, the stock's been doing amazing for the past 4 quarters. It's doing amazing. It has to do well. Yeah, and you may be right. It may beat EPS, it may beat profits, and it may do really well, but the price will drop. Don't know why. A lot of sellers out there, maybe the Trump effect, maybe the news, the economic issues that are having all over the world. We don't know. So pre-market is crucial to figure out where the stock has moved before you start day trading and swing trading. So that means creating a watch list, figuring out what you want to watch, which are the best stocks that you're familiar with, and where you want to take your trades. Finding a catalyst is also important because sometimes that helps drive the price up. For example, if Tesla releases its numbers in China, I guess last time they were low, right? But I mean, for technical traders, honestly, to be honest, it doesn't really matter because I knew Tesla's price was going to continue to drop. Why? Most traders knew that. Most technical analysis traders knew that because it's just the way when it broke resistance, it's just going to continue down. But sometimes it's good to find catalysts. Catalysts are basically news events on the stock. Like for example, there was a deal with Apple and Baba earlier this week. And then Apple price skyrocketed. So did Baba. Baba jumped several times. It had many gap ups, right? The next thing is the most important thing is to check the daily chart and higher time frames, right? You want to check the daily chart, you want to check the monthly chart, even the quarterly chart. Like I go up to 3 months just to see what is the general direction, what is the trend, where are we moving up, are we moving down, or are we just going sideways for the past few months? That's important when you're trading because if you're obviously I'm just going to talk about going long on stocks. Okay, that's all I do. I don't really short stuff, but if you're obviously long bias, then you have to understand that the monthly chart should be pushing up, right? The weekly chart should be pushing up, and so should the daily chart, right? Or should be bouncing off support. And we'll go through that right now. And then what we do is a very important thing is we mark levels, support and resistance. And we did this the other day. I'm gonna just jump into my charts real fast. And then we'll mark out some support. This was NVIDIA. We did mark out some positions last week. I remember this is Thinkorswim, by the way. So I'll just go through Thinkorswim. It's easier. Let's look at Apple. Yeah, this is a chart that I haven't marked out yet, right? When you look at Apple, the first thing you want to do is you want to go to the monthly chart. Very briefly, just look at the monthly chart. You want to look at where it came from and where it's going, right? And then what you want to do is you want to mark out some quick support and resistance points, right? And you can mark out stuff down here, even though the price is up here, so that way you know where we've been and where we're ready to go, right? So we mark out this important key level right here where price has broken up, retested, came back, retested again, and use this as strong support, right? And it started moving up. So then we can mark out levels right around here. We see that price is holding these levels really, really well, right? So we see that the price came up here, rejected, came back up here, rejected again in this zone. And then price used this support area as resistance, bounced up twice on it, and then moved up, right? There's a small little support area. So that's what you want to do. You want to get onto the monthly time frame and just mark out some areas, very broad areas. You don't need to be exact. Then we're going to refine this as we go into smaller time frames, right? And then obviously you have your high here at 260.10. You have a slight support right here. I go to mark that out with the line. So now you have a general direction of which way it's moving. I mean, even if you want, you can even kind of mark out kind of like a trend line that's going up this way. Pretty accurate, right? Multiple touch points every time I kind of touch this, it bounces, it's moving up. Let me turn on some moving averages because now that you guys know what moving averages are, I'll turn on the 200. Let's turn on the 9. And let's turn on the 21. Apply. Okay, there you go. So this is the 9, this is the 21 moving average, right? You see every time the moving average gets really tight, it pops up, right? Now we'll drop down to the weekly chart. And this, once you guys get into a habit, I know right now it may take you a little bit of time to do it, but once you get in the habit of doing it, it should take you no longer than a few minutes to set up your support and resistances, your trend lines, and then start analyzing the stock or whether you want to go long or not. As you can see, I mean, they're decently drawn trend lines. So if you look up here, we do have this line could be refined a little bit. Actually, this line can be removed and we can draw out a box right here. I think a box would be more suitable. A zone, I'm sorry. So you see that it went below this, but when it came back, it hit this support, broke above this, made this resistance into support and started bouncing and then moving up, started bouncing right here. You have a slight level right here. I think with that, we can kind of mark with the line right here. See that price was trying to hold this, did not, but rejected. Now it's trying to move up again. So if you look at Apple right now, since it kind of broke above this area, actually, let's just draw out the small box right here. Covered that. Okay, there we go. So you see how price has been rejecting here this support, right? One, two, three, almost four rejections. Then it finally broke up, all-time high, went back down, just flew through this support right here, made a resistance, bounced off this support, pretty strong support down here, came back up, faked out. That's a fake out candle. Huge sellers in this area. But then I think we had news last week, and now then news has shot up. And now this candle's actually closed above support. We always want closes of the candle's body above the support area because that signifies that we've now taken over this level. Now, the next thing we want to see happening here is we want this stock to go this way. Sorry, picked the wrong one. We want the stock to retest this area, maybe like this, and then push up to all-time highs, right? That's what we want the stock to do. And usually that's what it'll do. You'll have a candle that has an inside candle. So that's what we're looking for, right? And that's a weekly chart, right? So once we've set our support and resistance on the weekly chart, now we go on to the daily chart. Now, the daily chart, we see that there's some obvious support and resistance areas happening right here. So what we can do is we can go ahead and mark this out right here with a quick line. We see that price has been holding this area right around 247, 248, dipped, went back underneath this area, retested, went all the way down to the support, broke this resistance, went up, rejected, came back up. Now we're breaking up and trying to get above this, right? So if you can get above this area, and again, as we go into lower time frames, you're going to see that you have to draw support levels and have retest levels. So we have this, we're looking for price to break 247, 248, retest. There's a slight support right there, but I don't think that should, I mean, a resistance right there. It should maybe go this way and then hit all-time highs. So that's what we're looking for Apple to do now. The other thing that makes it very bullish, especially for swing traders, is that you see this line right here. This is the, sorry, let me zoom out. So we see that the price is above the moving average, right? The 200 moving average, which is key, right? As you can see, it's right here, right? As long as price stays above this moving average, it is bullish. Yes, it may have this big downturn correction, right? But then as soon as it hits it, you see it right here. Got very close, hit this moving average, bounce. Came close, but bounced. But once it hits it and bounced, last time it kind of hit it was in this area way back. Let's see, what date was this? Last year in May. It was under it, bounced on top of it, and once it was bounced on top of it, it just took off. It has never looked back until just recently, right? So that's one condition that you have to look at. Hey, is price above the moving average, right? All right. So now we know that Apple's moving up. We have this area right here that we want to use as resistance. So once price breaks up, so now you have a bias. Like, okay, well, I'd like to go long Apple. What next, right? Now let's go back to our slides and figure that out. Okay. So once we mark support and resistance, we have to look at news events. And I just discussed it. Sometimes earnings reports, special news, vaccines, new products, government support. One key thing that you definitely have to keep in mind is this number 4 right here, right? That's a link right there. You guys can check it out. I'll actually post it in the chat. I check this every single morning. Everyone in the meeting. There you go. It's a good website to go there. It kind of tells you everything that's happening. Let me show it right here on the screen itself. Kind of looks like that. Nothing to do with Forex. It kind of gives you the economic calendar of what's happening. And it tells you, hey, we have this news. Like last week on Wednesday, we had CPI data that came out, and that kind of affected the market, right? We have core inflation. Was core inflation going higher year over year, month over month? Yeah, it's gone up a little bit more. So, you obviously have like slight downturns, push downs. Then you have more core data. I wish they just took all this stuff every month and put it on one day. That way I know that day I'm not going to trade, because it fluctuates the market, it throws it around, it'll drop the stock for no apparent reason. And then, whether it's good or not, and obviously, when you have like stuff like data like President Trump is speaking and stuff like that, that's never good. FOMC chairs, usually it's Fed Powell. When this guy talks, the whole market listens. Either there's going to be billions of dollars in damage or people are going to make billions of dollars. I mean, that's just he affects the market a lot. That's why it's called red folder news. Red folder news is it impacts the stock market more. Not as much on this yellow folder news right here, which is Bauman speaks or Williams speaks or NFIB small business index. That doesn't move the market as much, right? But these red folder newses right here, that's why I like the site because it kind of tells you the importance of that on the market. Like what type of fluctuation. You see, it talks about impact right here. What's going to be the impact? The impact is going to be red. So you should be careful, especially when these numbers come out. So always watch that. I always check this website just to see, hey, I'm going to take some trades today. Do I have to worry about anything? So it's a great way to kind of figure out. And, obviously you want to protect your money. You guys are money managers, risk managers. You want to take care of that. Okay. All right. So you want to make sure you know that. All right. Now we did the higher time frame bias. We want to make sure that in the higher time frames, in the monthly chart, that we're bullish. The weekly chart, we're bullish. In the daily chart, we're trying to move up. Now, this is an NVIDIA chart from last week, right? And then we see this is the daily chart. And I'm going to show this live to you right now. But we see that in the daily chart, that price has actually come here, moved up, broke this support area, resistance area, retested, and now it's moving up and it's made a new high right here. It's broke all these. So now we know that NVIDIA is a little bit bullish, right? We have levels here at 140, and I think it already reached 140. And then we have levels at 144, 145, and then finally we have levels at 150. So that's a swing, right? That's a swing trade that I'm currently in right now. Took this right around here. When it pulled back, added a little bit. Now we're moving up. So my target, obviously, is to take some profits off around 144, 145, and then take the rest off at 150 and hold a few shares in case it goes above here, breaks this, and gets to around 153 and shoots up. So we'll take a look at it right now. And then intraday, right? Intraday is, for swing traders, it may not be as important. It can still make an impact. But for intradays, anything between like smaller time frames, anything from 4 hours all the way down to 1 minute, right? And we'll go over a few things right now. So intradays is important for day traders for sure. For swing traders, it can be important because you want to sometimes check the 1 hour chart, like, hey, how is the 1 hour chart or the 4 hour chart doing, right? And we'll go into that right now. So we were dealing with Apple here on the daily chart. And now that we've kind of marked out all the levels, there's no more levels to really mark. We know that do we have a larger bias? Monthly chart, how are we looking at the monthly chart? Well, so far, February has been a green month. Yeah, we got to worry about this last month, January, but you see that even in January, when price dipped down to this support level, you had a lot of buying that happened right here. That's that wick right there, right? It's very similar right here, right? A lot of buying. So when you have wicks like that, you have to be comfortable that, okay, price is closing above this support area right here, right? So that on the monthly time frame, this is the monthly time frame, that price is holding, right? And you should be confident that, okay, we're still going to push up, right? And now price has dipped down a little bit, right? But price is not closing below this. This is the close up top, right? And for a red candle, the close is right here, right? So as long as price keeps moving up, we're going to be looking for a break of these levels right here. We're going to be looking for a break of this previous month's candle and this 2 months ago candle, right? We're going to be looking for a break of both of those. That's around 250-ish. And right now we're at 244, right? So if we get a break of that, then it's definitely bullish. But we want to anticipate that break by getting in a little bit earlier. So we know that, okay, price is kind of going down. We have lower candles, lower candles, lower candles, but we haven't broken this area. So we're still good. The closer you can buy to this area, the better it is. So if price dip down right here, because you have to understand that your risk is more important. You have to understand, where do I get out? That's the first question you ask yourself. If I get in here, where do I get out? What's my max risk? And once you figure out that level, you have to figure out how many shares, okay? So we'll go through that right now. So once we figure out the monthly chart is bullish, we go to the weekly chart. And we look at the weekly chart and we see that, yeah, we had a drop right here, but everything's been on a low volume, right? And I'll go through that next week about how volume plays a big part, right? Now you see this big move right here. all the way to all-time highs, it's accompanied with growing volume, especially right here and this guy right here, right? Huge volume right here, right? On this last move up. So you have large volume. And now on this pullback, you see this pullback right here is accompanied with low volume. Yeah, it kind of picks up at the end, but the volume in general is lower than this volume and lower than this next push-up volume, right? So this volume area, this pullback has been low volume. And usually when you have low volume pullbacks, that means it's not a reversal. That means it's not going to drop all the way back down. It's just a pullback. It's just a small correction. Just like I said, that price does go in zigzag pattern. So this is that zigzag that's happening right now, right? It's going up and it's zigzagging down. And we're hoping that we can break like that. We can break this zigzag right here and then continue up like this, right? So that's what it's doing. So this is just a pullback. We're still maintaining higher lows, right? Higher lows, right? That's what you have to look at too. Don't forget these basic concepts right here, right? The higher low, higher high concept. I know it's basic, but you have to remember that because that indicates an uptrend, right? There's all uptrends, right? You have a high, higher high, higher high. So currently we're in an uptrend, right? This is okay for you to, if you had to take a long position, you're in the right bias, and if it pulls back, it pulls back. So right now we have a higher high and we have price pushing up, right? So once you figure that out, now we try to figure out, okay, where am I going to plan my entry, right? How am I going to plan my entries out? So we see that price is pushing up. So now we're going to drop down to the daily chart real fast and try to figure out where I should enter. Ideally for Apple, the entry would have been somewhere in this candle or this candle, right? Because we want to get in as close to the support as possible because your risk, your stop loss should be at support every single time. Like for example, like if you got in at the break of, let's say, as soon as this support breaks, you're risky. You said, as soon as this breaks, I'm going to get in. Where do you put your stop loss, right? That's the most important thing. Do you put it right here? Do you put it down here? What do you feel comfortable with, right? Are you willing to risk $11 per share, right? Or do you want to risk something a lot smaller, right? Which is, let's say we're just going to take the bottom of this thing. So we're risking about $2.50. Let's just say $2 for the sake of math. We're risking about $2 for Apple if you got in right over here. 1 second. Let me just mark it out so we kind of have a clear area. Let's say our entry is right here, right? Sorry. Let's say we got in right here. That's our entry. And now we've identified our risk as being this area, that if price does go below this and a candle closes below, not a candle comes here like this and then has a wick. Yeah, you got to wait it out. If this happens, you don't want to close your position, right? Right? You want to still stay in it because it may just be bouncing, right? But if it does something like this, where the candle closes like this, red, yeah, you want to get out. You want to get out somewhere around here, all right? So now we have our risk defined. Now I say, okay, how do I set my targets? Where do I take profits? That's the biggest question that people want to ask. But first, what's the most important thing? Where do I minimize my risk? I'm holding on to $2, right? Risk. So now you have to understand how many shares should I take? This is pretty easy math, right? If you say, well, I'm going to take 50 shares, then I'm risking $100 down here. Okay, so are you okay with risking $100, right? Let's go ahead and put that down. I'm risking, sorry, I'm risking $100, right? Right? And you're going to take about 50 shares right here. Okay, let's say your risk is $100. Where do you want to take your profits on 50 shares? I'm going to put that down right here that you took 50 shares here, right? 50 shares. And then your risk is 100 down here, right? Where do you take your profits? And is this going to be a 2-to-1 already? And if you did get in right here, our risk versus reward has to be at least 2-to-1. That means we want two of these, right? So let's see if we just accurately draw it out. Here's about 1. That's about the same size. And if you add that, another one, yeah, we've already hit about 2-to-1. If price has moved in this direction, this is 2-to-1. That means you're risking $100 and you're ready to make $200. So let's say this has actually moved up. I mean, it's moved up a lot more. 237, 244. So yeah, okay, maybe my accuracy is a little bit off. Maybe, yeah, this may be $232 means we got in at 238. Let's say 240 is $2. 242. Okay, so this would be 2-to-1 right here. So this is where you would take some off. The reason being is that you just want to secure some profits. If you took 50 shares, maybe take 10 off right here in this area because now you have a 2-to-1 trade. Now you're good to go. You have a 2-to-1 trade, right? But then your actual profit targets, this is an obvious area to take profits, right? So one of your areas that you would want to take profits is key resistance areas. And we drew this line out for a reason right here. But let's just take the high of this candle, right? Around 247. So you've gotten at 237, around 247, that's $10 a share, right? It's a good area to take profits. So you would take profits here, right? And if you have 50 shares, this would be kind of like where you want to swing till because since you have price that's that's kind of come up here and rejected or held support, it's held it. It's a pretty strong level, right? Decent level for intraday. So you said, okay, you know what? I'm going to take my profits up here. So for out of 50 shares, I would really take 90% off up here, you know. Um, let's say you take 45 shares off over here, you take 10 shares off over here, you have 35 remaining. So you take another 35 shares off here. And then whatever 5 to 10 shares you have left, you can just let it run, right? And then you don't have to have a stop loss down here anymore. Your stop loss can be now break even. So now if the price does collapse back again, it stops you off at break even. Some people even do a trailing stop loss where they keep moving their stop loss as the price moves up, right? So for example, if price continues to move up, let's say we have a candle like this, right? Price moves up, they'll move their stop loss from down here to break even. Once from break even, they'll move it up here. That way, if price swings back down, they'll at least make another $2 per share. And then as, you know, price kind of consolidates here and then moves up like this, they'll move their stop loss right here in this area, right? So that way they don't exactly, the price doesn't swing and then completely stops them out way out here. It continues, you'll at least get stopped out here and you still make $8 to $10 a share. So once you've identified that, now you actually need to kind of snipe your entries, right? So now we go into, it's going to get a little bit messy. We go into the 4-hour chart. Now, the reason why these colors are like this, because the white is the intraday, is the actual market hours. The gray is the pre-market and aftermarket, right? This is aftermarket right here. Once the market closes, it's aftermarket, and then it's pre-market right here. So that's why these gray areas are larger because we're talking about nighttime and early in the morning, right? And these white areas are your daily your actual market hours. So the reason why you get in here is because you start to find out more data, right? You start to find out like, well, price is actually last time price broke this level, it came like this and it hit this level right here, right? So yeah, there's an obvious, so the stop loss should be somewhere around here because now we're getting a more accurate area of where it is. We drew the zone out, but we're trying to figure out exactly where it is, like per dollar. Like, okay, 232.50 is around the max I'll hold for a loss, right? And we see that the moving averages are coming in here too. We have a few moving averages. We have uh, the 200. The 200 is not as important once you go intraday. The other moving averages become important, like the 21 and the 9. You can even have like a 50 moving average that kind of comes in like this. You can add that in the um, in the studies. But once you have that, now you're intraday, you're in the 4-hour chart, and you're trying to figure out, are we still bullish? You have to keep asking yourself that question. Are we still bullish? Yes, we are. We're pushing up. We have higher highs, higher lows, higher highs, higher lows. Now let's go to the 1-hour chart, right? Once you get to the 1-hour chart, things get a little bit more choppy. You start seeing these gaps, you have like a little gap area right here. You start seeing price like really moving, like these huge pullbacks and stuff like that. But you have to be ready for that because now price is being zoomed in on, like what's happening every single hour of the day, right? And a lot of people take entries on the hour chart because they can kind of figure out that, okay, well, if price gets over this level right here, I would love to enter because it looks like every time price hit this level, it kind of rejects, it kind of rejects. So I want to wait until price gets above this level and retests it. So what happens? Let's say you're here last Thursday or Friday. Last Thursday, price did finally break this level. Now you're waiting for a retest, right? It did retest, but retested in pre-market. And then finally, when the market opened, took off. And you said, okay, no problem. I'll just get in right around here. So if you're on Friday and if you're trading this market, now you can really snipe your entries, really get accurate entries. So you'll say, okay, my entry is around $243, okay? And I'm risking, I like this area right here because price has pulled back to this, right? So you're risking around $8 a share, right? Or you can say, hey, look, that's too much risk for me. That's too much risk for me. I don't want to risk $8 a share. I'm just going to risk it right here. I'm just going to take it right here, or I'm going to take it right here. So whatever that is, you have to do that. You have to do the math, right? It's simple math. You have to do the math to figure out, okay, am I just going to take 100 shares and risk $800? Or am I going to take 50 shares, right? And just risk $400 or 20 shares and just risk $160. Especially if you're a new trader, please take small share size. Please, please, please take small share size. It doesn't matter if it's 2 shares, 5 shares, 10 shares. Keep it small so your losses don't discourage you. So losses don't destroy your whole account. Take small shares, up to 5 shares, especially it's not exactly cheap, $244. You're spending $1,000 for 5 shares, right? Even 2 shares. Because right now you're not worried about making money. If you're worried about making money right away, sorry, you're not going to be in this game very long. This is a get rich slow scheme. It's not a get rich fast scheme, right? Yeah, it's easy to take 1,000 shares and watch. You may get lucky a few times, and then you may think you're an experienced trader that, oh man, look, I've been doing great. I made about $10,000 this month. Amazing. That's just a lucky spree, right? Experienced traders have gone through bear markets, bull markets, consolidative markets, choppy markets, war, pandemic stuff, just craziness, right? So I, if you want to stay in this game in the long term, you really have to take small share sizes. Excuse me. Yes, I do agree that you should be practicing also in a sim account or a paper trading account. Like in TradingView, they have paper trading, right? Let me show you real fast. All right, clear all drawings. Where is my paper trading account? All right, there it is. All right. So if you go to TradingView, you click down here, you have something called paper trading right here, right? You connect it, and then you'll actually be able to take trades right here. I mean, the only way you can trade, you can't take trades right now, but if you went to, let's say, Bitcoin or something like that, BTC, US dollar, right? And then let's go to the daily chart. So just trying to show you how the trading trader works, and you can buy Bitcoin right here, right? Like for example, I just bought how many Bitcoins did I buy? Yeah, I just bought one Bitcoin right here. It shows you right here. I went bought one Bitcoin. I went long. My average fill price was 97,000. That was the price that I bought it at right around here, right? And then that was the price. And now, right now, so far, I'm losing $3, right? It went down $3 or whatever. So, um, so you can do practice trading right here. You can really zoom in and figure out, okay, hey, look, what was my setup? Where's my stop loss? Where's my resistance? Okay, if I did get in right here I mean, and you can practice on Bitcoin and stuff like that because over the weekend, if you're trying to practice, you can practice on Bitcoin. It's not a problem, It's just or whatever cryptocurrency you want to practice. It's just practice. I'm not asking you to buy it. You obviously see that, okay, well, I see that there's support in this area. There's like a tiny support here. We are pulling back. We're not exactly bullish, and the moving averages are above the price. So I don't know if I should have gone long here. Let's see. Maybe I should wait until I go long here, set my stop loss right here, and if price hits in this area, I'll start taking profits. So this is more of a swing trade, right? But what I wanted to show you is this paper trading account, right? So this is a paper trader. You can practice your setups and strategies here, um, just to get an idea of how these setups I'm going to show you today work. Okay. So, all right. All right. We went through that pre-market news events. And we went through the higher time frame bias about how to snipe your entries. Let's see here. Yeah. So for swing traders, you really don't need to go further than an hour. I mean, yes, you can go to the 30-minute chart and take a look at it. It's just a lot more zoomed in, and you're really looking at your entries and you're saying that, hey, look, I'm going to enter as soon as a pre-market high breaks right around this area. This will be my entry. And if it comes back and retests, which it did right here, I'm going to go ahead and take that entry right there. So, and then I'll go ahead and get in right in this area right here. So, I mean, you can get a 30-minute chart and then figure that out and then take it long, and then you'll see exactly where your stop loss is. You want to keep your stop loss a little bit tighter. For swing trades, I don't recommend that. I recommend a wider stop loss for swing trades. Day trades, completely different. Okay. All right, let's go back here. All right. Well, we'll just keep it this way. All right. So next thing we'll go is the strategy, right? Like, how do you get in? How do you, this is the biggest question most people ask. People spend hours and hours back testing strategies of where should I get in? Where should I get out? And how do I know that this is the correct pattern for me to get in, right? Hopefully you guys have been doing some homework, not just waiting for the webinars. Hopefully you guys have been practicing a little bit during the week to find patterns, your technical analysis. Unless you spend personal time on yourself by yourself, watching videos. This is nothing. This is just foundational stuff. It's up to you to take it and run with it and figure it out. If this is something for you. I mean, obviously, we have about 6 or 7 of you that are very consistent. Alhamdulillah, I'm glad. I hope this is sinking. I hope you guys are interested. But initially we start off at 46, right? So that's how it is. It does dwindle down. And there's a reason why I have it this early in the morning, because it kind of separates the people that are being serious from the people who are not. It's very easy to show up at 12 noon to a webinar, but trading happens early in the morning, right? At 6:30 a.m. So you have to get used to waking up early, being early. And this is a way for me to weed out the people that are not serious versus the people that are serious to attend these webinars. Um, all right. So when you're doing with your strategy, you have to ask yourself, right? Let's see. Review. Sorry about that. All right. I have to ask yourself a few questions, right? Number one question is, what is your edge? What is your setup? And we're going to go through a few setups, and then you can use them if you'd like. And I'll try to explain them in much detail as possible, but you can also research it on YouTube, right? What is your setup? What's your edge? Without this, you don't get in. If you don't see this, you don't get in. You don't chase, you don't have fear of missing out and just get in because everybody else is getting in, or just because you see a huge move up, people are talking about it on a WhatsApp group or on a YouTube channel or on a Reddit post. Yeah, people are always going to talk about a stock and always hype it up, but it's your money on the line. They don't care. It's your money. You're going to lose it. So just be careful when you just jump into stuff because other people are, right? You need an entry trigger. You need criteria based on volume, price action, indicator condition. I mean, any one of these, right? That's what defines an edge. You need rules to this game. You cannot just go in there blindly and do whatever you want. You may get lucky a few times. Everybody gets lucky. I mean, you throw in a stock and long or short, one of you is going to win, right? And you may think that's trading. For me, that's gambling. So we have to make sure we draw that line between gambling and trading, right? Gambling is just throwing your money because everything else is moving, and hey, I'm just going to get in. I don't know why I got in. I just got in because whatever. Let's just see. Let's just see where it goes. I feel like you're gambling your money there because there's no edge. You don't know why you got in, and you might as well roll the dice, right? Astaghfirullah. So, where to define your risk? Where to set a stop loss? Again, how much money do you want to risk? You're a risk manager. You're not a trader. You're a risk manager. That's what you're just defining your risk. If the price moves up, great, but you're always managing that stop loss because if you want to stay in this game long, you have to manage your stop loss. That means don't hold with hope that, hey, it'll come back. One day it'll come back. Yeah, one day it may come back, but are you willing to hold for that long? You don't want to tie up your money into a losing trade. And I've done this several times, especially with Peloton. I remember Peloton was huge in COVID because everyone's buying a Peloton. I bought a Peloton because you couldn't go to the gym, couldn't do anything. We got better. I'm like, well, if I own a bike, this was emotional. I should buy the stock. Yeah, buy the stock. So I bought the stock at like $26 because you're shooting up. It went up to like 40 or something. And then COVID left, and everybody got rid of their Pelotons, or you use it as a coat hanger, right? And then the stock price dropped to like $3, and I held on to it. I said, no, 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 no. I'm going to add every single time because I know Peloton's a great company, got a nice screen, cool bike, cool people, emotional buy. Obviously I sold it for like a 70% loss because I kept on adding to it. It was a big loss for me, and also realization. So don't make that same mistake. And you need to have rules for your trade management. That means where to take your profits, where to get out of a stock, where to add if you'd like to add to a winning position, right? And then you need to have profit targets, right? Where are you going to take your profits? You have to take profits. This is where greed comes in. I'm going to talk about greed next week. I mean, we're all greedy. Greed is a natural human tendency. If you're human, you have greed in you. But how do we control that greed? Where do we draw the line between greed and like ambition, right? You're ambitious. Great, you're ambitious. But greed means you're over ambitious, right? So we'll figure out what that is and how to manage that. But profit targets are important. You should have multiple profit targets. And usually if you're buying at support, your profit target should be at Resistance, exactly. It should be at resistance, right? Or smaller minor resistances like um, we were showing you on this chart right here, right? So for example, let's zoom back out, daily chart for Apple. If you got in right around here, then you have to figure out where your support and where your profit targets are. If you got in right here, let's say your stop loss is down here. Well, I would like to take profits here first. Take a few off over here. Then, I see a little hesitation in this area. So I'm going to take some profits around 255, 247. I'll take some profits off 255. I'll save the rest for all-time high reach. Maybe not exactly at 260.10, maybe around 259-ish. You'll take 90% off and 10% you'll just leave if it goes like this. Maybe it pulls back and then takes off again. You'll leave that 10% there, right? Sometimes it'll go like this. It'll pull back, retest, come back, retest, and then go, right? Maybe you leave 10% for that. But when you have these defined profit targets, right? You want to take your profits or you have to take your profits. So that means you decide ahead of time, hey, I'm going to take 30% off over here. Take 30% off there. I'm going to take 20% off over here. Take 20% off there, right? Now you have 50% that you've taken. I'm going to take 40% off over here. Okay, well, take 40% off over there, right? And then save the 10% or 5%, whatever it is, for the runner. You always want to have a runner. That way you have no regrets. Otherwise, you're like, oh man, it ran. Let me jump back in here again. And then Apple crashes, right? So it's important. Why is it important to pay yourself? Because as soon as you pay yourself, you don't have to worry about your stop loss anymore. Your stop loss can move to your break even point, right? There is no stop loss down here. Now it's a break even. It's a free trade. It's a free trade now. You will not lose. You're guaranteed to win now, right? Even if the stock pulls back, hey, at least you got off here, right? We have to have that positive mentality. We can't always say, oh man, it stopped out. I should have taken off all my profits right here. You don't know where the market is going. You have no idea. If you think you know where the market's going, well, you're wrong. You're 100% wrong. Like a brother earlier told me, he's like, the market can stay irrational longer than you can stay solvent. And that's a quote. Look it up. So taking profits, yeah, I took off 30% here. Okay, fine. No, my other 70% went all the way down to my stop loss and hit me in my break even and I got out, right? So, okay, I missed out on taking profits on 70 contra or 70 shares. And let's say you bought it at 237, you got out at 247. You still made $10 a share, right? You have to look at it in a positive way. I sold 30 shares. I made $300. Well, I could have made $1,000 because I had 100 shares, but I only made $300. Don't think of it that way. Think of it like, man, this strategy works. That's all you guys should be focusing on right now is, does this strategy work? Wow, it worked. It worked. I made $300. Oh my God, it actually works. And when you get that feeling of confidence, that's huge. A lot more. It's worth a lot more than your $300, right? But the good thing is that, when price pulled back, you didn't lose $900 or whatever your $200 here. You made $300. And now, yes, you got stopped out, but now you know that, hey, that's why it's important to take profits. I want you to just think always positive. Put positive things out there. Don't think negative. That if you made money, you got to ask yourself, well, at least I didn't lose. And I did make a little bit. Yeah, you could have made more. Maybe next time, you take more off. And that's how you figure it out. You gauge it, right? Um, but you always want to take profits. Like they say, you never get broke from taking profits. And I don't recommend getting out of your full position because you have to have profit targets. And that's why you're in it. You're in this to make money, but at the same time, you're in it to manage your losses as well. So, all right. So I hope that's clear as far as profit targets go, right? All right. So that's profit target. Then you have your exit criteria, which is your stop losses. Once it hits it, you got to get out. Don't wait. You got to get out. You don't need to set a hard stop loss. A hard stop loss basically means a limit order at that level, right? You're already kind of like going there and you say, hey, look, I'm going to set a limit order. And you can do that. I mean, it's more important in day trading to set hard stop losses, like because price can swing a lot faster down. But you can set an alert here. Like for example, with this Thinkorswim, you can set an alert. You can say, hey, look, if price does hit here, you right click, you create an alert, right? And you say you want it below this price, right? At or below this price at 234, right? That's my stop loss. So what it does, it creates this alert right here. I hope you guys can see this. It's going in and out. at 234.43. And you can adjust that alert if you want. So now you have an alert created right below the stop loss, just like maybe 50 cents to a dollar below that stop loss, right? So if price comes back in here, it'll go ding. And if you have the app up, it'll actually alert you. You can have it email you. There's all these different alert options, and it lets you know it's like, oh man, price is there. You don't always have to be in front of the computer, right? Price, just hit it. Let me log in real fast. Let me log in on my app, on the Thinkorswim app. Their app is pretty good too. You can manage all your trades on the app, right? I mean, the platform is better, but if you're not home, if you're on the go and you're swing trading, obviously you don't want to be glued to your computer. You get the alert and you're like, oh man, I got to go check my position. Okay, then once you're in there, now you check your position and say, okay, is it like this? Is it just like dropping down like this, where I need to quickly get out? Or is it going like this and then wicking out, kind of like that, right? Okay, I'm still good. I'm still good. It's right at my stop loss. Maybe the next candle will kind of close like this. Okay, awesome. And then we'll, hopefully move up like that. Okay, awesome, right? So you want to manage your trade, but you got to be proactive. You got to set alerts. You got to figure it out. I even go to the extent of setting alerts everywhere. I'll set alert here. I'll set an alert at this profit target right here, at or above this price, because I want to take profits. I'll set another alert up here, create alert, at or above, create. I'll set another alert here because you don't always want to be in front of your computer. Yes, I do check it several times a day because I do trade every day. But these alerts will help you like, oh, take profits. Ding. All right, let me sell 30 shares. Come here, take another profit. Oh, let me sell 20 more shares. Okay, let me sell 40 more shares. And now I'll hold the rest. Wow, I feel so good. This is good. This trade worked out really well, right? So it's important to manage your trade. This is all trade management, setting alerts, figuring it out. At the end, it's your money. I mean, you can't just say, hey, well, Sarfraz told me this is yeah, I did tell you, but you're the one pulling the trigger. You're the one figuring this out. You're the one managing your trade, right? At the end, it's your loss, your money. So you have to decide what's best, right? So, all right. And one more important thing is to back test, right? Your probability of success with at least 100 track trades, right? So the reason why I say 100 is so you can figure out if this strategy that I'm going to teach you works for me. It may work for some of you. It may not work for some of you. Your style may be different where you don't want to wait for this. You want to wait for another type of strategy. So back testing is, like I said, um, using paper trading to kind of figure out, hey, does this strategy work? See, now I'm down $36 ever since we got into that long trade. So, it kind of shows you in live, especially in crypto, because cryptos are a 24/7 market. So you want to back test your strategy here. I'm going to teach you some strategies, and you back test them here means you test them out. You take them into a simulator environment or paper trading environment, and you test it out here as many times as you possibly can. I would say 100 trades because then out of that, you can kind of, if you keep track of these things, okay, well, this worked, this did not. This worked, this did not. Out of 100 trades, 60 of them work. So now you have a win rate of 60%. But it's completely different when you're trading with money. So then you go in and you try with money, right? You go and try with your live money. Not in crypto. I don't suggest you try anything with crypto, but you go in and you open up the markets in the morning and you say, you know what, I'll buy 2 shares of Apple and I'll test out this strategy. Oh, it worked. Okay, great. I'll buy 2 more shares of Nvidia next week and I'll try out the strategy. So now you have 1 trade in. Now you have a 2nd trade in, a 3rd trade in, and you want to document these trading in Excel and say, hey, look, I took this trade on Apple. I took it on a crossover of a moving average crossover, and I did well. I won, right? Here's my P&L. This is how much I made. Check mark. Now here's trade number 2, trade number 3, all the way down to 100, right? It's a lot of work, but it gives you an idea that way later on, if you want to size up and say if you want to go from 2 to 10 shares to 100 shares to 500 or 1,000 shares, whatever your account allows, you'll have more confidence going into those, right? All right. So if we are to go long, what do we need to look for when we go long, right? We need to make sure that the number one, that it's above all support zones, right? Support zones are very important, right? And we talked about that, right? We want to make sure that price is above support and not reaching resistance, right? So if you look at this, I'm just going to remove these alerts right here real fast so we have a little more room to just clean chart. We want to make sure price is above support. So if this is currently above support, if we're looking at this last 2 days ago, we know that price is right here, then okay, great. It is above support. So this is good. So check mark on that, right? So we know that this is good. Is it above the 200 SMA, the simple moving average, right? We have to talk about on the daily chart only, right? The daily chart, weekly chart, larger time frames. Is it above the 200? So we go back and we check that. And we say, is it above the 200? Yes, it is. 200 is down here, right? This is the 200 right here, right here. This golden line. So yes, price is above. It's bouncing off above. So that's good. So we have two checks now, right? And the more checks you have, the more your bias is confirmed, right? So, all right. Now, green candles in the monthly, weekly, and daily charts, we go back and check it again, right? Daily chart, yes, we got green candles. We go to the weekly chart. Yep, we got a strong green candle. Monthly chart. Yep, we got a green candle. So everything is pointing up, right? Everything is pointing up. We're in good shape, right? We go back to our. Now the moving average is curling up. Now I'll turn on some moving averages. I think I already did that. We can add another one. Now the moving average curling up. So we have to zoom in on this a little bit, right? We got to get in a little bit zoomed in. Are they curling up? Let me turn on another moving average for you, okay? This is the 50 moving average right here. I'm going to go ahead and duplicate this one. Okay. New study. Call this the 50. 50, change the color to, I would throw red, right? Show plot, show bubble, show title. Okay, apply. Okay. Now we have a 50, right? I mean, this red line is the 50. So we have the 9, the 21, and the 50 moving averages, and the 200 right here, right? Now you see them kind of moving down like this. What are they doing right now? They're all kind of converging and they're moving up. See, when price is, you can tell right here, right? When price is above the moving averages, right? Right here, price is above the moving averages, it's bullish. When price is below the moving averages, obviously it's bearish. This is a very simple strategy. I'm going to teach you guys that. Very simple. Very simple. And that's how I learned to swing trade. And I did quite well with this strategy. So right here, you want to notice the same thing. That price right here is going zigzag. Above, below. Above, below, right? So now price has kind of moved above, right? All your moving averages are right here, right? I'm going to zoom in on that price right here and take a look at it one more time. So you see, moving averages, you have the red one right here. The black one is your 9. The blue one is your 21, and the red one is your 50 days, right? 21 days, 9 days, right? That's why the 9 moving average is closer to price because it's only dealing with 9 days. What's the average price over 9 days? It's around this level. That's what it's showing you. Average price, 9 days. Average price, 21 days is around here, hence price pullback. Average price for over the last 50 days, it should be right around this red. Average price for the last 200 days, right? So now you see all the moving averages are curling up, like they're pointing up. You can see right here, they're pointing down, right? They're pointing down. But right here, they're pointing up. So that's a bullish sign, right? So I want you to remember that. All right. And is volume increasing, right? That's big too, right? Is volume increasing, right? Volume is increasing, right? So if you look at volume right here, right? So we have low volume in this area, very low. Then we have high volume, right? High volume. It's it's not gonna be like, yes, sometimes you'll have price like this, like increasing volume, like small, medium, medium, and large, right? That's what you want. Eventually, that's what you want. And then price volume is slightly increasing here, but everything else checks off, right? Everything else is checking off. So it's only one thing that doesn't exactly check off. So just be cautious that it could go up there and pull back, and then you may have the high volume move up, right? So you want to take a look at this. All right, one second. All right. So all of these kind of checked, right? Right. These are all checks, right? 2, 3, 4. This kind of checked, right? And you can even say, okay, fine, this didn't check if you want to be disciplined. 4 out of 5, not bad. You can still get into that trade, right? If you have multiple things that are not checking, you don't have a long bias. You don't have a long bias. So you got to remember that, okay? Now, are you buying at support? We already talked about that. You want to buy at support, sell at resistance, right? Um, you know, so, all right, let's go to the next one. So now I'm going to teach you one strategy. It's a setup. It's called the ABCD pattern, right? And it's kind of like the same pattern that we initially talked about in our candles and charts pattern where we go zigzag, right? Where we buy at the zigzag, as soon as it breaks, we add, that's our stop loss, and then we can move up and then move up like that. It's a zigzag pattern. So I'm going to show you that real fast before I get into other stuff. I use this all the time. Sometimes we use all these strategies together, and that gives you something called confluence. Confluence basically means that it's a lot of positive signals. They're all together pointing in the right direction that, yes, this is a long, you can go ahead and take it. So let's look at the ABCD pattern. Let's look at only the bullish case scenario, right? An ABCD pattern can be seen anywhere and everywhere, right? Sometimes they don't look as pretty, but if you want to see an ABCD pattern, this is A, right? A, B, where the ABCD, the points are A. The next point is B. This point is C, right? And then we have D, right? So it's the points that we're talking about. And an ABCD pattern, we have A, B, C, D. That means A right here is a low, B is a high. C has to be a higher low, right? You need a higher low right here. And then obviously D, as soon as you break this, you have a higher high. So you have two higher highs, right? And then you have two higher lows, right? That's an ABCD pattern going to the long, right? Now, where do I enter on an ABCD pattern? There's conservative entries and there's slightly riskier entries, right? For example, if you're talking about this ABCD pattern, A, B, C, D, that's a nice D, right? So some people say, okay, if it pulls back and then the candles start moving up right around here, I will enter right here at this point, right here. I'll enter on this candle, right? And then my stop loss obviously will be the low of the lowest candle in that ABC, that C movement, right? That'll be my stop loss. I'll enter right here. And my profit, as soon as it breaks this high, as soon as it makes a high right here, I'll take some off and I'll hold the runners for the rest. And you can see that the runners can be really nice, right? All right. We'll zoom in and look at some more examples right now. Um, so even right here, we have this is on the daily chart, right? We kind of have an ABCD pattern. It's a really weird ABCD pattern, so I wouldn't really consider it A, B, C. Now we're looking for D, right? We're looking for D up here, right? We're looking for this to break, for it to be a D. And I'm talking about swing trading right here. So if this happened, and let's say you had a B, A, B, C right here, and you see that C is holding sideways for a little bit. Like I said, it's not going to be just up, down like this, A, B, C, D. This is A, B, C, D to the downside, right? Right? This is A, B, C, D. This is A, B, C, D to the downside. It's perfect, right? But sometimes it goes like this and it goes sideways for a little bit, right? You'll have sideways movement. It's called consolidation. And sometimes that helps you prepare for a trade and it's not as abrupt, where you can be like, well, look at this line right here. It is holding, it is holding, and it's holding, it's holding. This is good. So you'll have chance to enter here, or enter here, or enter here, or enter here. Right? Or you say, hey, you know what? This consolidation pattern is really good. And as soon as it breaks out of this consolidation pattern, then I'll enter. So let's say you enter right here. That's the highest point of this consolidation pattern. So your entry is right here. Still a pretty decent entry, right? And then your stop loss can be somewhere right here, right? And then obviously you'll say, hey, I'm going to take profits after we break this area, after we make a new high. We have a high, we have a low, we have a higher low, right? So I want a new higher high to take profits, higher high right here. Right? And this kind of coincides with the example that we were using Apple for before, that if you did get in right here, our profits would be right here regardless. A, B, C, break, D, take profits right here, and hold the rest for the all-time high break, right? So it's your typical zigzag pattern. You can do it on any time frame, right? You can even do it on longer time frames like the weekly chart, right? You can do it on the weekly chart as well. You have ABCD patterns. And obviously you need a lot more patience to do it on the weekly chart because it's going to take a long time. You have A, B, C. And if you did get this entry here last August, I mean, that's amazing because D was this, all the way to all-time high, right? Right? Higher high, higher low, higher high, right? So your entry will be right here. You would really have to be on point with this entry. I mean, this is a weekly chart, so yeah, you probably had a few candles here, but there was one candle that kind of dipped, right? That's your ABCD pattern on a longer time frame, right? Sometimes the D takes time, right? The D takes time, right? And you may think like, oh my God, it rejected. Oh man, I'm definitely getting out right here. I'm out. That's why you take You don't just do ABCD pattern. You take ABCD, you take your support and resistance levels. You have support right here, you know, you have resistance right here. You keep all of that in mind. It's a culmination of all these things. That is why this trading webinar is very important because we're taking everything that we learn and putting it into a trading plan, a setup right here. Now, this is an ABCD, true, right? But you also have to keep in mind, where am I buying? Am I buying at support, right? Yes, you are. Because look at this long-term support right here, right? A, B, C comes down into your support. So now that's confluence, right? So Fraz said, rejected at B because there's what? Resistance, right? Came back to support at C, resistance, right? Now I'm buying at resistance, but do I really want to buy here? I don't know. Okay, well, I'm going to buy because it has support. Now, if you did buy here, your stop loss would be right here. Very low risk to reward, right? Right. Let me just use a different color. I apologize. So let's make a square. So if you bought right here, this is your risk right here, right? Let's say a small amount of risk, right? And then your reward is, you're looking at this high right here. So you're looking at my reward is going to be up here, right? That's amazing. That's a great trade right there, right? All in an ABCD pattern, right? You got in on the A, B, C. You got in on the C. Now you're looking to get profits out at D. And then you're looking to hold more for the runner, right? That's what you're looking. And then here you're targeting if that's an $8 stop loss, you're looking at a $36 move to C. $36 per share. Can't go wrong with that. And you waited with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 weeks to do it. It's a swing trade. You have to be patient. Like I said, going back to those questions that I asked you, are you patient? Will you be able to go up and down in this area, right? Hence why it's important to take profits on the way. That doesn't hurt to take profits, right? You can definitely take a lot of profits. You can take profits off as soon as it pumps up here at this, it breaks this. I'm going to take some profits off over here. Oh, it got very close right here. I'm going to take some off over here. It went back down. Oh, you know what? I think I'm going to add a little bit. We'll get into that later on, but took profits off over here. Now it broke, took some more off over here. You know what? Moved up to the all-time highs. Now it's pulling back, so I'm going to take some profits off over there. You're scaling out of your position. This is called scaling out, taking partial, right? Excuse me. Iced tea, always good. So that's the ABCD pattern. Now we'll do it on a smaller time frame. And I know we're running out of time, but if you have to leave, by all means, please do. But I do want to go over this for a little bit. Actually, I'll go to the next strategy because we already did a higher time frame over here. So we'll continue to the next strategy. So that's an ABCD, right? And I'll go dig more deeper in the detail after this webinar is over if you do want to see more in that. But just for the sake of time and to respect everybody else's time, inshallah, we'll move forward. Right? That's ABCD pattern, right? The next we're going to go is called the 4-8 cross. Now, the last time I did this webinar was in 2020, and there's a brother just like yourself who attended it, who's still using that same strategy. He's never left the strategies. 4-8 cross, right? 4-8 cross is more on the intraday time frame, right? Or the daily time frame, right? It means that the 4 moving average is crossing over the 8 moving average. They're crossing up like this, right? And then price is above it, price action's above it, and that's how you get that candle. Now, the larger the moving averages, the bigger the move and the longer it takes for these crosses to happen. For example, the 21 and 50 cross. When the 21 and 50 cross, it's a larger move. It takes longer to happen, but the chances of it recrossing back are very low. 4-8 cross, it may cross over and may cross back right back down. And then you have something called the golden cross. This is long-term swings, months, right? All the way up to 11 months, 12 months, maybe even a few years you can hold this. It's the golden cross. They call it the golden cross, but it's the 50 and the 200-day moving average. When they cross in the up direction, you have a great move up and you can really hold this stock for a very, very long time. And then up and down in the swings will happen. But I'm going to show you some of these strategies. And a lot of people have used the strategy and they still use the strategy till this day. Remember, the one thing good about trading is that once you learn it, you have this knowledge forever. It doesn't really change. You can add to it, but it doesn't lessen like a programming language. If you're still using COBOL, I mean, programmers here, if you're still using COBOL, you're out of a job, my friend. I mean, even ASP.NET, C Sharp, and everything are now the languages. Now you have to learn AI. So it's constant revising. I have nothing against programmers. I hire programmers all the time. But the thing with this is it's like something you buy and something you learn, and it stays with you for a very, very, very long time. All right. So let's look at the 4-8 cross, the 21 and 50 cross, and the golden cross. Quick examples right here. So we're going to zoom out. All right. So I want to identify these levels first, right? So, okay, let me switch it up. Let's look at the 4-8 cross first. That means I have to change some moving averages around. Um, there we go. So we're going to change the 9 to a 4. Okay. That's the black line. All right. The black line is the 9. Actually, I can, that's a 4. Yeah. Let's change it to a fun color. Let's go purple. Let's make it a little bit thicker so you guys can see it. Apply that. There you go. That's the purple. Now we'll go to the 21. 21. We'll make that into bright blue. Make that to 3. Make sure you guys can see it properly. Yeah, okay, that's good. All right. So we're just going to focus on these two moving averages. I'm going to turn this one off. All right. So this is the right. Sorry, did I switch this? Oh no, this has to be the 8 moving average, right? We're doing the 4-8 cross. Okay, 8. All right, this is a 4-8 cross, right? So on the daily chart, the 4-8 cross, you want to make sure that price action is above the moving averages, right? Now, when does a 4-8 cross happen on the bullish side? Now, obviously, you need to pay attention to support and resistances as well. Now, you see price right here is above the 4 and the 8, right? It's above it, right? Now it crossed below it because it hit resistance right here, right? So obviously, you want to buy at support. Remember, multiple confluences, right? You want multiple confluences, right? What does that mean? That means you want to do the 4-8 cross, but at the same time, you want to buy at support. Let's say price comes down here in this area, right? I'm going to zoom in, right? Yeah, sorry. So we're zooming into this, just giving you a big picture. We're going to zoom in right here into this area. So I'm just going to highlight this area right here, right? We're zooming in right here. Now you see price has come down and hit this level, right? Now we want to see these moving averages cross. We want to see them cross over, right? So what's happening right here, right now, you see this light blue line right here, this aqua line is the 8. It's above the 4, right? It's above the purple line, which is 4. This is the 4. This is the 8, right? We can see that. Price is going down, right? We want the smaller moving averages, the 4, to be on top, but right below price. And we want the 8 moving average to be below it. Now, if you look right here, there's a cross happening right here in this area. All right. There's a cross happening right there. So this day, right, whatever this day was, 429, the cross happened where we went from bearish, bouncing off of support, to bullish, right? So what happened? This candle closed. Again, you want to wait for the day to close. That's the only way you see the cross. This candle closed right here, right? And then the cross happened. So let's say you look at it the next day and the market's opening up and you see that the cross happened. Now, a lot of people will buy the next candle of the retest, right? So this candle pulled back a little bit and now you see the moving averages are kind of fanning out a little bit, right? They start fanning out. They start going from here to going like this, kind of like a fork, they kind of fan out like that, right? And that means that price is hitting support, bouncing off, and then moving straight up, right? So where would your entry be? Your entry would be in this next day, right? Anywhere in this day, especially because you're doing a swing, a long-term swing you're holding for many weeks, maybe a month or two. It doesn't matter. You don't have to snipe it, right? So your entry would be, let's just say right here. You got in right here at this level, right? And your stop loss can be the low of this or the low of this. Up to you, right? Or you can be a stop loss right here, right? So now you have this stop loss, you have your entry. Now you got it. Now you want to make sure that price stays above these moving averages, right? And sometimes it'll dip in. So we're going to zoom out now. We're going to watch this trade go, right? So our entries right here. And now you see price is moving up. Now price dips down right here, right? So what happens next, right? So this is where we get in. Yeah, we got in right here. This is our entry right here. So I'll show you in real time right here. So this was a cross, right? Show you the cross right here. The cross happened right here, right? Your entry was right here, and your stop loss is in this area right here. Let's say your stop loss is right here. Basically the resistance, right? That's where your stop loss. I mean, I'm sorry, the support. That's where your stop loss is, right? So you got your entry, you got your stop loss, and now you see that price is moving up. The moving averages are kind of fanning out a little bit, right? And you see price moving up, price holds it, holds it. It does hit the next resistance, right? So if you want to take profits right here, it's a good idea to take some profits off right here, right? Because you hit the next resistance. You broke through this resistance. Some people take profits right here. Not bad. I would take profits right there. Scale out, maybe 20%, 30%. Hit the next resistance, you scale out again, right? 20, 30%, right? And we're talking about the weekly chart here, right? So this is a little bit more long term, right? You get in right here, you don't have to get out until these moving averages cross back over on the other side, right? And here you had a big downturn, obviously, that's why it's important to take profits here, important to take profits here. So if you have a big, harsh pullback that's going below the moving average and actually closing below both the moving averages, that's not a good thing. But do we cross back over? We don't. We don't cross back over. We keep going, right? We get very close to cross back over. So let's look at where you actually get out completely, right? So now that you got in here, you've taken some profits off over here, right? You've taken some profits here. You've taken profits here. You've taken profits here, right? And pull back hard. And you still have a little bit of your position left because your stop loss, your entry is way down here. Never hit your entry. If it hits your entry, you get out. Remember, as soon as you take profits, your stop loss is no longer down here. It's at your entry. It's up here. You want to move your stop loss up to this level, right? You don't want to keep your stop loss up once you take profits. This has to be a free trade for you now. You don't have to risk anything anymore because you already have profits. Profits. So now even if the price came down, it never hit your break even. So you still have to stay in this trade, right? And take it back up, right? So now let's see where this trade would end. Right in here, there's some crosses that are happening, right? So if you really zoom in, it crosses over. You see how the purple gets below the blue? I mean, you can wait a little bit longer to find out, but most people who've already taken profits are okay to get out of this trade, right? They're okay to get out of this trade. So sometimes you can kind of get out right there because now you see the price is crossing over, or you say, okay, today the price crossed over, just like you waited for the price to enter. Today the price crossed over to the bull side. I'll get in the next day, right? Now this price candle closed as a doji. This is an indecision candle where it's a very small body and equal signs. Almost looks like a crosshair, right? So it's a very indecision candle. Indecision candles usually, if you study them, you don't know. It doesn't know which direction the price is going. Hence why we have the crossover, right? We are also at support, which is good. Resistance is right there, which is good. We're at support. So you could possibly hold it, but if you want to take your profits out and get out, you did really well. I mean, we're at 220, right? Where do we buy at? We bought at 183. You're talking about $40, right? That's $40 a share, right? So even if you get in right here, right? So where are we? All right. So where's that doji candle again? Right here, right? Right here, right? So if you get out, great. You had a great trade. If you continue to hold and you say I'm going to wait for the next day to find out if price actually goes below, right? Sometimes price will go below, right? And then suddenly you see price like this, and then you'll see price kind of dip down a little bit, and then it may bounce right here and then start moving down, right? So if that does it, then you get out right here, right? That's your out, right? That you still made a lot of money. If you decide to hold and continue up, then you just went to all-time highs, right? Now that's on the weekly time frame. Let's go to the daily time frame. You'll find a lot more opportunities, and it's a lot shorter swings. If you don't want to wait many weeks, maybe potentially a month to take profits, you can take it on a much shorter area. And we'll go back to the same area where we had our example, right? Actually, let's go to an area where we can get in and out. So yeah, here's an in and out right here, right? And it's the same area where we actually took it long last time, right? If you look at the weekly chart, we got in this area. That's it. The date was 5/6, right? May 6th last year. Let's go back to the daily chart. And if we're looking around the same area to get in, let's see where it's across. Actually, let's take something a little more current, just recently. Happened in November, right? So in November, we have a cross that happened right here, right? I'm going to zoom in. Sorry, just bear with me. And I want to show you the price as it like really zoomed in so you can see the cross. All right. So now you see that the price is, this is a daily chart now. You see that price action is above, right? Above the moving averages. And we have no crosses yet. And then right here, we have a cross in this area where we see this purple goes above like that. And then the blue goes below. And now they kind of are entangled a little bit for a little bit. And then they start kind of separating, right? You want that separation, right? You want that separation. So your entry could be right here, right? The crossover happens in this area right here. Let me just use a different color. All right. So the crossover happens right here, right? Right? So you wait a day and let's say, oh, right here it's still going. I don't know. Sometimes a crossover happens, it crosses back over. On the daily chart, there's a lot more crossovers, right? Back and forth, especially in this consolidation zone. You have a slight consolidation zone, not like this clear downtrend. So let's say you wait and you have a nice big green candle like this and you get in right around here because now you see the clear separation, right? That's your in, right? Now, once you're in, you don't get out till it crosses back over. Where does it cross over? You have a nice move up and you're buying right around support area, very close to support. So obviously your stop loss could be the end of these candles, the bottom. You can even do stop loss at the end of these candles, the bottom of these candles right here. And now you have a strong move up. You got in right here. Let's see. Crossover right here. And yeah, you got in right here at this candle. Your stop loss is down here. Let's just draw out the stop loss right here, right? And now you're watching that cross. You're watching to see if it crosses over. That's where you exit, right? You may take some profits off right here at this resistance level. It doesn't cross, doesn't cross, doesn't cross. A little sideways action right here, does not cross, but you have a support level right here where price is holding. So you may want to take some profits off right here. Doesn't cross, all-time highs. Do I take profits off over there? It's up to you. I mean, we're hitting all-time highs. When you hit all-time high, it's price discovery, right? No one's ever seen these prices of Apple before. So people are going to take profits. They're going to take profits right here. They may start taking profits every single day because they don't know when the next down candle happens. But you do because you know when to get out now. Now you see this candle happen. You're like, no, I'm not going to get out because price still closed above the moving averages. But on this candle, it's an indecision candle, a doji, but it closed the thing with this indecision candle and something like this right here, which is above price action. This is below price action. So once you have below price action, you want to take off most of your position here because a cross is coming. Once price goes below, first price goes below the price action. First price goes below, and then the cross comes, the recross back downwards, right? And I'm going to go ahead and zoom in on that. So right here, you see the cross, right? The cross is happening right there. Now the purple line is going below, and the blue line, which is a 4 and the 8, they're crossing back over. You definitely want to be out by this point, right? Remember, you got in way down here, right? 225, 228, you're getting out. If you've taken profits along the way, right here, right here, right here, then you're getting out. Even if you don't take any profits and you get out at this point, you're getting out at 250. It's almost $20 a share. That's amazing. That's amazing. You have to think about the positive. Don't think about it as a negative. That's $20 a share right there you just made. And if you play from cross to cross, first cross to second cross, right? That's the strategy. Very easy, right? You don't have to know anything else. Yes, you need to know your support, your resistance, you need to manage your risk, but basically you're getting in at this cross and getting out of that cross. It's from cross to cross. It's a very, very simple and basic strategy. But one thing about this strategy you have to know is that are we in a clear uptrend, right? Clear. Because if we're going choppy like this, right, you may want to get in right here. There's a cross right here and quickly get out right there. So there's not much, right? It's because we're going choppy. We have a very small range right here, right? It's not like we're buying somewhere around here where we have a decent cross that happens way down here, and then you take it all the way up here and you get out right here. For example, here's another cross that happened right here, right? Price is above, price is below, so right here. Get in. And price stays. It gets close. It never crosses over. It gets close, gets close, gets close, and you want it to get out, you get out right here, right? Look at that move up. That's incredible, right? You got in right around here at 170 at support. You're at support May 1st, right? You hold it. You're holding it to what, July 22nd. And you're taking profits here, you're taking profits up here at support areas, and you get out at 225, right? 170, 225. That's a win for me. I'll take that any day, all day. And that's how I usually do my swings is on these crosses. I still kind of use it, but I use a lot of different things all put together. Support and resistance, swinging, crosses, and other strategies that I'm going to show you. But what is the 4-8 and moving averages? Yeah, they're 4-8 exponential moving averages, EMAs. That's what they are because they react to price very swiftly. So that's what these are, right? There's a 4-8 EMAs. I'm just answering a question over there. So yeah, you can take it on the larger time frame. I mean, imagine if you took this on the monthly chart. If you want to have a long-term positions, like let's say you're not a day trader, you're not a swing trader, you're just a position holder. You just like to hold a stock for a year or two. I'll show you that too. I'll show you that too. So, I mean, you're gonna have to be ready to hold it for like 5, 6 years because these crosses, when they happen, they don't happen again for a very, very, very long time, right? So, for example, let's see this consolidation period right here. So we have price above the moving averages. That means we have a cross. So, right now, when we get close right here, we have yeah, we got a cross right here, but I'll show you the cross before that. So, if you wanted to take this last move up, right, the cross that happened was in the month of May last year, right? Right here, cross right there, right? The cross happens right in that area right there. May of last year. So if we took a May of last year, I don't think it's going to cross over even till May of this year because of the way it's spawning out. You've done really good for yourself. You got in around, let's say, even if you got in the close of this, you got in at 192 and you've held it to all-time high, so 260. That's amazing. That's $70 a share, right? And this is long, right? You're holding for almost 8 to 10 months, right? So you can use it on any and all time frames. If you want to use it on smaller time frames, let's go into the intraday, right? People use it on intraday as well. This is 5-minute chart. This is a 5-minute chart. This is on Friday. No, was this Friday? No, this is Thursday. Let's look at Thursday, right? Because Thursday you have prices above, but it's the crossover happens right here, right? Right here you have a crossover. So you price crossover right here on the 5-minute chart. You get in. This is your entrance right here. And you ride this from, let's say, 237-ish all the way up to it crosses over right around here. I mean, it kind of crosses here. Let's say even if you get out right here, you're looking at 237 to 240. That's $3. $3 for a day trade is really, really, really good, especially if you have like 100 shares or even if it's 50 shares. But the point is, it's not about the shares, not about how much money you make. It's a strategy. Your strategy is working and you can always scale up, right? You can always scale later on as your account gets larger, right? So your risk is right here. This is your risk. It's still a 3-to-1 trade, 2-to-1 trade, right? That's what you're looking for. This is on the smaller time frames. I've showed you larger time frames. And yeah, that's a 4-8 cross. And we haven't even gotten to, I mean, the 2150 cross, the golden cross. And in the interest of time, it's 8:30. I apologize for going over, but these are much longer. They're much more drawn out. It takes longer to explain this because once you realize that you have a strategy, you can start trading. Like as of right now, if you know support resistance, if you know risk management, if you know candlesticks, if you know moving averages, you can take a trade on Tuesday. Monday we're closed. Tuesday, you can take a trade on Tuesday on a cross, intraday, you know, Apple just crossed right here, right? This is daily chart. So Apple just had a cross, right, last week. It may even pull back and get in. So you see how everything is adding up. Even it's an A, B, C, D, right? Right? A, B, C, right? You have a C, right? And then on top of that, you have a cross that's happening, right? You have a cross that's happening right here. You're also buying at support, right? You're buying at support because you cross, you buy the next day, right? And then we go back to the ABCD, and then you take your profits right here, and you're waiting for D to happen. So we have support resistances, 4 and 8 crossover, ABCD, they're all together. And when you can put these things all together, obviously focus on one at a time, but when you put at least ABCD and the 4-8 cross or any moving average cross together, and then you buy at support, you have a lot of confluence. You should have a lot of confidence in that trade because you're doing everything right according to rules. And then all you need to do is manage your risk. So I know it was a lot of information today, um, but I hope you understand at least one strategy that we focus on. There's like two more strategies that I'd like to show you. Maybe you'll go into next week. Maybe you'll come back after Ramadan and then continue if you'd like, if you've liked this series so far. But I'll go to questions. And if you have questions, just unmute and go to ask. We only got about 6 people here. So I'll stop right there, inshallah. Or you can just chat it in the box. That's fine too. Any questions at all? We clear on the 4/8 cross, ABCD patterns, Bollinger Bands. I used to use Bollinger Bands. It's um it's an indicator, and I'll show you that next week. If you'd like me to show Bollinger Bands, I can show you. But I mean, it's okay. I mean, I'm not a big fan of Bollinger Bands just because sometimes it can continue breaking those bands and ride up those bands a lot. But I'll show you that next week, inshallah. Any questions on today's material at all? From patterns to strategies, questions that you have to ask yourself, higher time frames, pre-market. Any questions at all?
Just trying to take it all in right now.
Okay, no worries. Yeah, it's a lot. It's a lot to take in, but I would highly advise you guys to take these strategies and start looking at it in multiple time frames. Like, just go to any chart. Doesn't matter, go to S&P 500, take a look at it on the daily chart and you'll see that, you know, you had a cross right here, very clear cross right there. You had a cross right here that happened, and you could have taken that from 570. I'm not saying trade the S&P 500. Okay, let's use a better example. Everyone's favorite, Nvidia, right? I get the most questions on Nvidia, right? Nvidia's been pretty choppy, but it's been within a range, right? So if you took a cross right here, then your next cross is right here, but it's very, very choppy, right? Only if you took crosses like much earlier on at these support levels right here, and then you get in around like 84 to $85, you're taking profits around 124. Currently, a cross is happening. In fact, a cross literally just happened on Thursday. So entrance would be on Friday right here. See a cross happen right there. And we're actually at support as well. You see like this little area of support right here. I mean, we just broke above resistance, and now that's becoming support, the little retest right here. And then you have areas that you can take profits up here, 140s, 150s. So we had a cross right here. You can see a very, very, very clean cross too. So look right here. And a cross, and it was just one day in. Just one day in. Friday was the day to get in. And yeah, I may ask it, can I chase the stock up? Can I get in right here? I don't recommend it. I don't recommend it. If you miss the cross, if you miss the next day and it doesn't like pull back, sometimes I like these pullbacks. I like for example, here it goes like this and pulls back. So sometimes the price may go like this and pull back right here, just to retest this, the support area, and then take off. And the cross will still stay. It'll go like this. It'll go like that. It'll go like that. It'll get close like this, and then it'll take off like that. That'll be the cross. So NVIDIA just had a cross. You know, now that you have this crosses in your head, you know what to look for. You know that you start looking at these. You're looking at
Just a quick
Amazon.
question. Yeah,
Yeah.
just a quick question. Red versus blue. What is the representation there?
Um, it can be whatever you want. For example, you can come in here and change it. This is 9 and 21 crosses, right? This is
Okay.
I've switched to the 9 and 21, but you can go 4, you can go 8, right? It's changing as we do it. Okay. Press OK. Now it just changed, right? So in TradingView, it's called TEMA. That's the you can add it. You can add indicators and stuff like that in TradingView. So um, once you add it, you go in here, you can change it to whatever you want. This is a 3 indicator one, second and third moving averages. And once you see it, then you have these crosses, right? You have a cross right here. You have a recross back right here. Um, so this is a 4 and 8 cross. So I'll just stick to 4 and 8. Netflix, cross down here. Cross down here has crazy move up. It went from 858 to 1,000 something, right? 1,050, right? Tesla is on the down, right? It had a cross on the downwards, then it kind of crossed up a little bit, and it crossed back down again. So now it looks like it's trying to cross back up, right? The moving averages are coming. So it's something to watch that if it does cross back up, you can ride it up. But we have, Tesla has been dropping and dropping and dropping for a while. So, we had bounced off of support right here too for Tesla. So big support right here in this area. Um, so, we're approaching resistance in this area. We have resistance up here, so you want to take all that into consideration when you get into trades and stuff like that. So but yeah, that's it. AMD obviously, you see this is the difference between a 4.8 cross and like a 21 and 50 cross. You won't get very many 21 and 50 crosses, but when you do get them, you want to capitalize on it because it lasts you for a long time, right? Especially like, for example, there's a short cross right here. I don't short it, but short it over here, 155, you're all the way down to 113, I made like $40, right? Nvidia cross. It's been, kind of back and forth, but if you had taken the cross, the 1950, the 2150 cross would be somewhere around 115. And the next time you'd get out is probably right here around 137. So it's still about $15, $17 per share, especially down like look at this cross right here. It happened way over here at $43. The next time it crossed was $114. So yeah, the larger the cross, the higher the move, the longer you wait. So it just depends on what you want to do. Okay. Any more questions? And if during the
Thank
week,
you.
yeah, no worries, no worries. During the week, you guys have questions on this, just WhatsApp me. I don't have my notifications on, so it takes me some time to get back to the messages, but I will get back to you, inshallah. Because I've had some people send me charts on WhatsApp. Take a look at this. Is this right and stuff? Yeah, no problem. I can give you feedback on that and tell you what you're missing and what you're not. But Jazakallah khair for attending. I'll go ahead and stop it there. I hope you guys have picked up a lot on this one. Inshallah. I'll see you guys next week. Make sure you practice, make sure you get some chart time in, start taking a look at these crosses, ABCD patterns, ABCD patterns are everywhere. Sit there and look at them, practice as much as you can. The more you practice, the better you become. And inshallah, this is beneficial for you and your families, okay?
Jazakallah khair.
All right, guys.
Thank you. Thank you.
No problem, guys. You guys have a great rest of your Sunday. And inshallah, see you guys next weekend. Assalamu alaikum.
Thank you. Salam.
جزاك الله خير وعليكم السلام.
Wa alaikum salam. No problem.